Hello, welcome back. Today we are going to be talking about most effective way to build long-term equity portfolio. I have been investing into equity for last many years, more than 15 years now, and I have had mixed results for about first 10 odd years. Then I happened to meet one of my mentors, Mr. Avdut. He opened my eyes to some of the very basics of equity investments, based on which I have enhanced my approach towards equity investments, giving me very good results, fantastic results. And here is what I follow successfully. The key here is making it extremely simple, as simple as it could be. Simple decision making, yet extremely powerful. Let's get rolling. This is a risk disclosure. The most important thing is equity investment is risky. It may not be suitable for all. Evaluate your risks before taking any positions or playing with your real money. Financial success depends on various factors, internal and external. We will not be able to take any responsibility for your financial success. Okay, what do you buy? Before we get into the equity, let's look at our behavior when it comes to purchasing any item. When you go to restaurant, do you go to a restaurant which is cheap, which has got insects around, which has got food that is not of the best quality, or you go to a decent restaurant with very good food, with very good experience, even if you need to wait in the queue? Clothes. Do you buy clothes which are cheap, or do you go for branded good quality clothes? When you need to invest into a property, do you buy a property just because it's cheap, even if it is in the bad locality, even if it has got bad infrastructure, or you are willing to spend little extra to get the good neighborhood and high quality infrastructure? I'm just wanting you to think about it. If you really think, we always choose quality. Quality is relative, but what is high quality to me is what I would go for, as long as I can afford it. When we go for the stock investment, I'm actually owning part of the company. So, what should I be going for? I should go for the excellent management, good track record, hugely profitable, with equally good future prospects. I want to go for an investment that will generate multifold returns. Now, if I need to buy all these, everyone also would be interested in buying the same. And if everyone is looking at buying such investments, would they be cheap or would they be expensive? Just a food for thought. We'll answer some of these questions as we go along. Now, when it comes to stock investments, next question is, how do you differentiate good from bad? There are two basic theories in stock market. The first one is buy the value. Look at the fundamentals of the company. Look at the changes that are coming in. If GST is coming in, what are the impact that the GST is going to have on different industries? If it is going to have impact, should I buy the companies which are going to be impacted positively? I want to look at the stocks or the companies which are going to be changing their business model in the changing business scenarios. Other theory is to go for a technical analysis, which is nothing but looking at the past various movements, including price, volume, time, performance. So when it comes to fundamental, there are certain limitations of fundamental analysis, because one, the data, that fundamental data that we have, is never about future. Future is always futuristic statements which may or may not be right. This is the information which is presented by management and analysts who are paid for speaking on behalf of whom you know. Now, whenever something good or bad happens to the organization, there are a lot of internal people, the management itself, the employees, the vendors, the customers, a lot of people who are directly dealing with that organization. They would get a hint or two even before you would get to know about it. Would they be first sharing that news, or would they be taking action on their portfolio? This is a very important question. One of the most important thing that you need to look at is, are you the first to get the knowledge or information, or you are the last? Typically what happens is, till by the time the information comes to general public, the decision is already taken to buy. Who wants to buy, they've already bought it, the price is already moved up, and then the retail public comes in, starts buying at top of the price. And same thing happens when there is sell off. The general public starts to get to know about it only after the biggies have sold their piece. If you look at technical analysis does also have got past movement of the stock, but then that past movement of the stock is actually opinion of the biggies or the masses about future of the organization. So if I'm buying Reliance today, I'm buying it because I believe it's gonna give me good returns. Second, it's not the analysts feel or people who are paid for just giving some false information, but actual actions which are taken by those people. Some people consider it to be complicated and time consuming. I am here to make it extremely easy for you. A lot of people say technical analysis is for short term people, day traders who buy and sell 100 times during the day. That's a untrue statement. And then most importantly, if all the buying is already done, will I be buying at the top and selling at the bottom? Again, there are lots of very simple technical indicators, technical things that you could see, which will help you get onto the trend at the right point in time. And then there is third group of people who buy based on the name that they like. I had a friend of mine who said DLF sounds so interesting. Let me buy some stocks. They follow some of the friends, they follow the news and any other reasons just because their astrologer says it's gonna be good investment. Okay, let me stop the theory here and talk about practical. When it comes to technical analysis, there are only two things that I see. The first one, trend. Trend is my friend. And second, how does the future look like? There's absolutely nothing else that I look at. This is a tutorial to make things simple, to make money, and not to make things complicated. Trend. These are very simple trend examples. You've got chart. Just looking at chart, if you look at the end point or today's price, if that is top right corner, that means trend is up. If it is top bottom corner, it means trend is down. You also have one more case where trend is sideways. So for example, if you look at this particular part, the trend should have been sideways. This part, the trend should have been sideways. So there are also trends which are sideways, but we are not going to be investing or doing anything with the stocks which are going in sideways. Second one, how do we judge the future? That's a big question that everyone has. So what I do to judge the future is use two indicators. The first one is Ichimoku cloud. The numbers which are put into bracket are the setups. Ichimoku cloud basically tells the future potential direction for next 26 periods. When it is green, like in the first picture, it says it's going up, and when it is red, it says it's going down. So simple. Ichimoku cloud, people have habit of making it extremely complicated. Actually, it's a very complicated topic, and if you want to learn, you could always learn. But if you use just so much for your equity investments, it's perfectly fine. You don't need anything else, anything more. Second one, pivot points. We use the pivot points, Fibonacci pivot points. Pivot points have got multiple lines as you see on this graph. The black line in the center is called PP line, which is pivot point. When the stock is above this line, it gives a bullish indication. When it is below this line, it gives bearish indication. Extremely simple. And then there are up there which are the resistance lines. The first one is called R1, then R2, R3, and below are called support lines, S1, then there will be S2 and S3. Typically, it is observed that a stock reaches to a resistance line R2 or R3 and then it starts the downward journey. You could see it in this chart. It has gone all the way to R2 and then started going down. Here it has gone all the way to R2 and started going down. Here it has gone to PP, tested the PP, started going up. Again tested the PP, started going up. These are typical uptrend. You will go touch the PP line and then start going up. So these are a few of the examples. What I've done is I've taken monthly chart of Infosys. So what it says is thick green cloud says for next 26 months Infosys may, the keyword here is may, we have no surety about anything that can happen in the market. This is just probabilistic statement that Infosys may go up. And if you really look at it right now, where it is at the S1 pivot level 918. That's where it is found support for last 4 to 6 months. Okay, so now with that support it can actually go up, or it can go down to S2 also. Second chart is a weekly chart of same Infosys. What it says tells me is next 26 weeks Infosys actually may go down. It is finding support around 919, which is S1 support line for last about 16 periods, a long time. It goes to 919, goes back. Okay, another thing that you would have seen is S1 support line of monthly is 918. S1 support line of 919 is on weekly. So when these kind of things happen, these areas become very strong support. What does the daily chart shows? Daily chart says next 26 weeks, days, Infosys may actually go down. And on the pivot lines, it has just moved above the PP line. So it may actually keep above PP line. PP line says it's going up. The cloud is saying it's going down. So I'm not very sure where it is going. Weekly says I'm fairly sure that it is going down, but then 919 is a very good support. It needs to break if it has to go down. And what monthly says is that in next 26 months it's gonna go up, and it is taking very nice support of 918. What we do is look at the future cloud and look at the positioning of the pivot points. This is sufficient. You don't need anything more than this to judge what's gonna happen to the stock. This topic is for investors, and I'm making an assumption that most of you investors invest for minimum 26 weeks, which is about a half year period. So if I am buying a stock, I will hold it minimum for half a year, more than 1 year, more than 2 years. Ideal scenario is 15, 20, 30 years. Now let's talk about the basic simple rules for entry. To buy a particular stock, you have to be satisfying each and every point mentioned here. Okay, trend for minimum one up move and one down move in the economic cycle have to be up. So if you really look at it, we would have started trend somewhere around 2003, 2004 till about 2008. It was an uptrend. From 2008 it came all the way down. Then we have seen another uptrend rally. So we are talking about at least one up and one down trend. To save, I mean, you can actually look at even more data, but if you look at 2003 to 2004 till today, about 15 12 years of data, that should be sufficient. Second one, monthly future cloud has to be green. So I don't want to trade when the long term is saying that it possible to go down. Weekly future cloud either thick green or converting from thin red to green. Okay, either changing from red to green or it is green. And then the daily cloud should be turning from red to green, and price should be breaking out of the cloud. Okay, if these three conditions are not met, what do? You wait. So first you find stocks with the good trend, and then wait patiently for weekly cloud to turn either red to green or to be thick green, and daily cloud should turn from red to green, and the price has to cross the cloud. On the pivot side, weekly price should be above the central P1 PP line. Daily price should be above the S3 line. S3 line is the last support line, and S3 line is the best support that you could get. If it has even broken that S3 line, then there is no point, probably the trend is not going to be reversing. And if you are looking at the cloud breaks, usually the S3 line, it will be above S3 line. And then monthly price should be sufficiently below the R2 resistance. What happens is, most of the time, as I showed you on the other chart, uh, the price moves to monthly R2 line, takes good resistance, retraces it back, stabilizes, again goes up. So I don't want to be buying at the top of the market. Exit rules when things go wrong. If the worst case, if I, after looking at everything, market does what market has to do, and it has proven me wrong, I have no problems getting proven wrong, but I have problems losing money. So what I do, I just get out of the position. At any point in time, I don't want to have more than 30% of my capital being risked. Okay, so if I bought Reliance at 1000, if it touches 700 and closes below it, I am just out of it. Monthly cloud turn red, long term trend is gone, I am out of it. So when you look at just this monthly future trend is red, get out. Or weekly future cloud is turning red, so it is started getting red, and the price has also gone below the weekly cloud. If this condition is happening, I will be out. The third condition is, if the price is below 30% of previous high. When I buy, I usually want to buy at a lower price. So just look at previous 10-15 weeks, look at the high there, and the price should not be 30%, more than 30% below that high, and my buying price is at least 25% above. So let's say stock has gone down 50%, and I have bought this stock after it fallen 40%. I will not exit the trade till the time my position is more than 20% in loss. I've repeatedly observed that there are certain stocks which go down, but then they recover equally fast. So I don't want to take risks, and other of my conditions will take care of. But if the price goes more than 30% below, I'm out of it. And when I look at these, I look at on a weekly chart over the weekends, when the candle of week is completely complete. This is something that you will keep on getting time and again. If you follow this strategy judiciously, sincerely, about 9 out of 10 times you will make money. You will not make just money, you will make tons of money. And the most important thing is to start taking money out from the table. So let's say I am in profit and monthly future cloud is red. I am booking complete profit. Okay. Next one, if I am more than 60% in profit. You remember from the last slide, we talked about 30% loss maximum. So for that, I have made twice as much as loss. And then the price is on monthly R2 or R3, which means that price may react and it may come down. What I'll do, I will take out my investments. So if I have invested 100 rupees, I take out 100 rupees, let the 60 rupees of profit be there. The next one, if I am more than 100% in profit, my money is doubled and price is at weekly R3. So weekly R3 is probably a resistance on a weekly basis. If I am at weekly R3 and 100% profit, I will take out my money. So typically what happens is I invest 100 rupees in a stock. Let's say it goes 60% up and I take out my 100 rupees. Now 60 rupees is my new investment. After that it retraces, goes sideways, whatever. Then again it goes up. Let's say from 60 it has become 120. So now the moment stock comes at weekly R3 level, I will take out 60,000 again and play with remaining 60,000. So what I'm doing is I'm taking out money as the market is obliging me. At the same time, I'm keeping good portion of my profit, actually all the profits, in the market on an ongoing basis. What do I do with the money that I take out? I probably find another options, another stocks, and keep investing in that. As long as the monthly cloud does not get red. So I will keep on running my position on and on and on. Lot of people ask me, this is very nice, but tell me how can I actually do? How can I actually get to find which stocks? There are tons of stocks around. So this is a simple place. I would rather do it on the screen for you. Here. So if you go to the NSC website, this is the NSC homepage. From NSC homepage, click on live market, equity stock. We are equity investors. Go to equity stock. Here you will see a lot of stocks. So in one glance, you can look at a particular group of stocks. So this chosen is Nifty 50. These are all the stocks which are in Nifty index. The beauty here is this column. This column talks about past 36 days of performance in a small graphlet format. Okay, so just looking at this, I can tell that this particular stock, Infosys, is not in the uptrend right now. I don't want to buy it right now. Techem, it's not in the uptrend right now. I don't want to buy this. HCL Tech, it is probably in the uptrend. Being an IT, watch out. Another thing is here 52-week high and 52-week low. The stocks which are at 52-week high are high potential to continue going up. The more the green here, the better chances of those stocks to continue going up. And if you have got something like this, my friend, Coal India, thank God this stock. You never know how far down it's gonna go. What I recommend is you limit yourself to Nifty 50, the next 50. The next 50 is the next level of organizations which are not as strong as Nifty 50, but they have got potential to get into Nifty 50. And some very risk taking people can go to mid cap 50. Between these 150 stocks, you should look at your investments. I do not prescribe at any point in time going for any penny stocks. Don't go for small caps. Yes, there are stories which come out. 10 रुपए का stock 100 रुपया हो गया, 10 times money. But then there are lots of untold stories that to find that one 10 rupee stocks which goes to 100 rupees, you have to invest in another 20 stocks of 10 rupees each and lose 200 rupees to again 100 rupees in one stock. That is not something which works on a longer period. Second place where you would get these charts, my favorite place, money control. Let me quickly show you how I would go about doing that. I click on the stock search quote, type in the name of the stock, Reliance, select Reliance Industries. It opens this nice quote box. Yes, there are some advertisements, but then you have to live with those. If you need free things, there's nothing free, right? You have to pay it somewhere. And then click on the technical chart. This is a new addition that these guys have done. Very nice piece of work. When you go to technical chart, the first thing that I usually do is to go for a full screen, which is this last button. It makes the graph look bigger. I can do a smaller version of it. Okay, so this starts the data from 2005. Let me move it on one side. So now I've got data starting from 2002 2003. Okay, you could draw a line from here, but with time you probably don't need to draw the lines so often. You could I'll just quickly show you here line. Something is not working correct. Okay, let me leave on that. Then you need to select the indicators. Okay, we have got a lot of indicators. Please do not get confused at any point in time. All you need is the Ichimoku cloud. There it comes. And this guy does not seem to have the pivot points, so you could actually skip the pivot point here. The charts that I have shown you, they are from Zerodha. So if you are a Zerodha customer, you could log in into Zerodha and you could look at it. So here once I have confirmed the trend, I don't need to go into those details, and I have the clouds here. Okay, very simple, very basic, very interesting tool is what we have. Okay, so you could change the theme, you could change the uh, type of the candlestick. You could do a lot of things here when you want to do it. Okay, let me get out of the zoom. Let me quickly show you on the Zerodha. These are the place where you add the studies. So I've just taken pivot points and Ichimoku cloud. Volume, if you want to see the volume, add it, not necessary. Okay, uh, let's start with the monthly view here. This is the monthly view of Reliance. So look at the monthly cloud being green. that is when we want to start looking at Reliance to be a buy. Okay, you would have noticed that we show next 26 periods of data, so next 26 months of data. So when this would have gone green is probably 26 months before this month, which is this month is 0701. 26 months back will be near about 2 years, which is 2014. Okay, so let me go to 2014, 2015, 2014 January. Okay, this is where it is. Let's put a line there. 2014, it was here somewhere. Just give me 1 second. 9 2014, 7 2014. So what I would do is I would look at it when it actually started going above the cloud. Okay, so this is the line that I have plotted. So when it was the monthly started turning positive is January of 2014. That time onwards I'm going to be watching Reliance and looking at Reliance when it does buy on weekly and my daily. Okay, there is one more place where I would probably turn bearish is this month, March of 2015, when the month closed below. So March of 2015 to April of 2015 I would not take a trade. Okay, so let's go to the weekly chart. On weekly chart, let me find those points. Okay, so the first point when it became green was this. You want to see the presentation here. Okay, so the trend was up in Reliance. Monthly future cloud is green. Weekly future cloud either thick green or converting from red to green. Okay, so when I was here, the future cloud weekly is thick green, so there is no worry from here till about this position. Okay, let me draw a dotted line here. This is when the weekly cloud went down, and again here on this week 15/6/2015 again I would have started seeing the green clouds, and from there, except for these three periods, so let me draw one more dotted line. So this period I am not going to be buying. Otherwise, all the time Reliance is up. Okay, now let's go to the daily chart. On daily chart, the first dark bold line that we saw was here. Okay, and what do you see on daily chart? The price has to break out of the cloud. It is already too much above the cloud. I am not going to be buying it. I would wait till the time it breaks above the cloud, and then the chart becomes green. Okay, so this is where it broken This could have been my buying price, 983, and then the cloud again started going down. Let me draw a thick line here. So this could be my buying line, okay, because 26 days from here it is still green. Then I'm not going to be buying. Then I have again weekly buy here somewhere, and that was when this weekly buy had come, daily buy had come, okay, which is at the price of about 890, okay. So I may buy at the price of about 1000, or I may buy at price of about 890. It really doesn't matter, 100 rupees here and there. And then again one more time we had a breakout, so I had one more chance here to buy one more time Reliance, okay. Again, one most important thing, we since we are doing it on a weekly basis, we may actually get little bit movement on daily, and only after then we'll buy. It really does not matter. This was the null period in weekly, not a buying opportunity. And then on weekly actually there was no major buy opportunity, so we are not been buying, but we are still keeping stop loss of about 700 points and continuing trade for good. Let me show you on weekly. For good 20 odd weeks, no, sorry, more than that, from 2014, or the next opportunity was 2015 and 2015 again. Oh, sorry, we didn't want to take these two trades, right? So we had to take this trade. Hmm? And then there would have been one more trade here, probably not. Hmm? So from 2014, this guy did not do anything. There would have been a trade here somewhere, but I'm not. So 2014, or maybe there was another option in 2015 July. It did not do anything till 2017. It's not come on to my stop loss. It has not given me any indication to sell. Continuously sideways, and then when it moved past this 1000 mark, it has directly gone to 1400. Am I still selling it? No, because I am not yet made 60% of the profit. If you look at your monthly, it is already crossed the second pivot level, is R2. It has well passed the R2, R3, and gone up. But I am not going to be booking profits because I have not yet made 60% of my money. Let me go back to the presentation and finish off all the basic items. So what you do is, in the NSE page, you look at the charts which are trending upwards. Then you look at the entry rules and you choose which ones to buy, and then all you need to do is whether my stop loss is getting hit or I am ready to book my profits. Believe me, if you follow these rules, you will double, triple your investments over a period of 4 years, 5 years, sometimes every year. Indian market is just starting the bull run. You've got very long way to go. You can continue making a lot of money. There are also a lot of things that you could do while you're waiting for the right trend to come, for which I will be recording a new video. If you have liked it, please like on this video. Subscribe my channel to get more ideas on trading and investing.